it like it was yesterday, staring wide-eyed at my screen, my mouth agape as I watched the price of one single share of a particularly trendy tech company climbing to the stratosphere. The price tag? A whopping $3,000 for a single share. Who in the world, I thought, could afford to invest in this? Just as I was about to dismiss it as a playground for the ultra-wealthy, the headlines started buzzing. Stock split announced. Now, for those of you unfamiliar with the term, a stock split might sound like a bad breakup between a company and its shareholders, but it's actually quite the opposite. It's when a company decides to increase the number of its shares by dividing its existing ones. It's like having a $3,000 gold nugget and deciding to break it down into 10 smaller nuggets, each worth $300. Overall, you still got $3,000 worth of gold, just in smaller, more manageable nuggets. Another reason for a stock split can be to increase market liquidity. More shares in circulation could mean more trading, which can result in a more efficient market. It's as if our designer dress was suddenly mass-produced, giving everyone a chance to own one. Now that's what I call a democratic runway. So why do companies do this? Well, for one, it can make the stock more accessible to investors like you and me. After all, it's a lot easier to fork over a few $100 compared to a few thousand. It's like seeing a once expensive perfume being sold in smaller bottles. Same fragrance, just a price tag that allows more people to afford it. However, just as you wouldn't buy an expensive perfume simply because it is in a smaller bottle, it's important to remember that a stock split, in and of itself, doesn't actually make the company cheaper. Although this price per share decreases, the overall shares also increase, and the overall value of the company remains the same. So for each dollar you invest, you receive the same value, not more. As much as we love a good deal, it's crucial not to let the allure of a lower price tag distract us from doing our due diligence. The moral of the story? While stock splits can create opportunities, they also remind us that a wise investor looks beyond the price tag. So, the next time you see a company announcing a stock split, take a moment. Look past the dazzle of the lower price and analyze the company's value. Because when it comes to investing, it's the value, not the price, that truly matters. Now that's a principle you can take all the way to the bank.